Joining us to help us make sense of that rate cut and how it impacts your investments is Deven Choksey, the Managing Director at Deven Choksey Securities. Deven, thank you so much for joining us on All About Stocks. Now, I want to start off by asking you, the RBI's rate cut earlier this week was more than what the market expected, but we also know that the RBI governor issued that warning. He said inflationary pressures are not completely under control. As a result, the room for further rate cuts seem limited. Now, explain to us what this means for the economy, what this means for the market, and indirectly for our stock investments.
I think this rate cut would result into a couple of actions. One, with the rate of interest coming down, it should help revive the infrastructure sector, which wants to grow by deploying funds. So the funds coming at a lower cost, I think it should help infrastructure sector. The cost of the funds coming down should also help the retail consumption, because on a higher rate of interest, I think the consumption indeed takes the hit, and that is where I think the retail economy would ultimately grow. The third most important aspect is about the influence or the impact on the sectors. The rate sensitives like bank and the autos and the home loan would tend to benefit more, because the banks would have the lower amount of NPAs going forward because of the kick-starting of the activity within the economy and the release of funds coming in through the projects. At the same time, the bank's credit growth will take off in such kind of a situation, and they will have lower provisioning requirement in their books because of the fall in the rate of interest and impacting them favorably on the bond portfolio or the yield portfolio.
You mentioned infrastructure. I want to talk about that sector and about capital goods, especially in the case of companies like L&T and BHEL. When do you expect that capex cycle to reflect the change that we saw this week?
Capital goods segment players should be the first beneficiary out of this particular rate cut cycle, because the infrastructure projects which have been halted for the want of funds at a cheaper cost, they would probably start the process of getting commissioning onto the projects, and it would probably mean that the supply side activity would start from L&T and BHEL kind of a company or companies.
Within the banking sector, we saw results announced by HDFC Bank this quarter were promising, was better than what the market expects. Are there any banking stocks you see at this moment as opportunities for long-term investors who maybe did not pick up these stocks in December last year?
We find that a lot of headroom is still available in stocks like State Bank of India, and for that matter even Axis Bank, ICICI Banks, IndusInd Banks. So in a rising scenario, generally when an investor puts in a fresh money into the market, he would certainly like to go for bargains. And State Bank of India kind of a bank available at a valuation of somewhere around 1.5 to 1.8 times price to book value. Or for that matter, Axis Bank kind of a bank available at around 2 times price to book value. IndusInd Bank with a similar kind of a model which they are having like HDFC Bank could probably also have, I think, a higher amount of interest generated in the minds of investors.
Deven, auto reacted positively to that rate cut as well. Are you bullish on that sector? Any stocks there that you would recommend to retail investors?
So from a point of view of looking at companies in auto space, I would look at Tata Motors in four-wheeler because of the valuation advantage still remaining favorable, because the stock is still available at around 8 to 18.5 times price earning ratio. JLR getting listed separately into global market would have the valuation unlocking coming into Tata Motors. And as I explained, in the core business, the commercial vehicle and the JLR products should see a rising growth in the markets coming forward. And Bajaj Auto in the two-wheeler space, where the headroom could be on a higher side if the company is generating higher amount of volume under the rate cut, and at the same time new model launches that they are likely to come out with in this year.
Right. IndusInd Bank, ICICI Bank, Tata Motors and Bajaj Auto, recommendations from Deven Choksey. Let's move on very quickly to our portfolio segment, where we look at the portfolio of one lucky viewer every week. This week we're looking at the portfolio of Ashok Mehra, who's a retired defense person. He wants us to take a look at his stocks holding. His first stock is Coal India. He has 125 shares which he bought at 325 rupees each. Would you recommend he continues to hold it?
Given the size of the company and given the possibility of A, higher amount of production volume taking place, and B, better amount of realization taking place for Coal India, because once the coal washery business happens, probably they would be in a position to have higher amount of yield realization coming into them. However, having said that, the government's policy and the intervention on an ongoing basis in dictating terms on the pricing front, etc., would definitely, I think, affect the company in the near term. Considering that particular fact, I would put the price range of Coal India between 370, 380 on the upside and on the downside at around 320, 330.
Right, hold Coal India. Next up is Exide. We know, like you said, the auto industry is showing promise at this point. Exide, he bought at 105 rupees. He has 220 shares. Should he continue to hold it?
Considering that there would be a regular demand happening because of the growth in the automobile sector, and considering the predominant position of Exide within the auto space, I would think that the company would have better times going forward. So expecting a very big upside from current level, probably unless the market turns euphoric and there is a general preference coming in from the investors to invest into the market, I would think that that would happen somewhere in the end of the financial year 12-13 and maybe I think the first quarter of 13-14.
Right, and Mr. Mehra's next holding is L&T Finance. He has 210 shares bought at 51 rupees. Among that lending sector, would you say L&T Finance is the best bet he can make right now?
Preference-wise, if you ask me, I would consider IDFC as a better choice from infrastructure financing activity, as I call it. L&T predominantly plays its role there, and probably I think is a deserving candidate over a longer period of time for considering. But in the shorter period or immediate period, if you are asking me as a first priority, my choice would stay with IDFC.
And his last stock is Suzlon. He bought at 35 rupees. He has 125 shares. Given the debt on the books right now, Deven, would you recommend he holds this stock?
I would think that one can hold on to Suzlon for the time being. Maybe I think one cannot put in the timing to this particular stock currently, but one will have to keep looking at the positive news flows coming in from Suzlon's side, and that could possibly allow the stock to perform little better than what it has been performing in the past.
Okay, Mr. Mehra, the only change you need to be making there is L&T Finance. Deven, when you look at his portfolio as it is right now for a long-term investor, would you like to add something to that portfolio or recommend he make some changes?
So banking could be, I think, a preferred choice from my end. Along with that, I think some of the capital goods and equipment suppliers companies, particularly companies like Sterlite Technologies, which is available at around 40 odd levels, I think could be a good choice to buy into the portfolio, because it is suggesting that it can probably grow between 25 to 50% in 12 months to 18 months time.